Hey guys, welcome back. In today's video, we are talking about why it's easy to reach 1500 per share, when the shorts will start losing, Citadel and Virtue sued, and many more in this video. Firstly, we're taking a look at this. Fun fact, the difference between max and minimum Bitcoin market cap during last month's Bitcoin drop corresponds to approximately $1,500 per share in the AMC float. Now, we've talked about this before in the past, but I think it's very interesting and it's something we should realize, which was obviously there are assets that are being used to be borrowed as collaterals to short against AMC. Some of the assets we talked about in the past before has been tech stocks like Nvidia, has been crypto, Bitcoin, and others as well. And so as we see Bitcoin seeing this decline in value, which is still ongoing even as of right now, we're obviously seeing a lot of capital being rotated. Now, the reason why this is important is that if the short sellers previously, especially the fact of how much they use with the tokenization of AMC, but if they were using crypto, or more importantly here, Bitcoin, as collaterals to short AMC, bear in mind they're facing stress right now as we see the value of Bitcoin dropping. And so all of that value that was previously gained onto Bitcoin then was borrowed out to short against AMC. As we see that disappearing in the crypto market, what we are looking at is how the short will have to maintain that position, but would eventually fail if they don't find any other alternatives. And so when the time comes that they can't hold on to those positions anymore, they can't hold on to the hundreds of billions of dollars that they've borrowed, that they've used, we're obviously going to be seeing how those positions will have to be covered if we don't see Bitcoin or these assets they use as collaterals recover. Now, of course, one thing this is talking about every single value from the Bitcoin dropping. And so not all Bitcoin was used as collaterals. We've already talked about it for some in the past before, but you obviously understand how if these collaterals that they were borrowed against are falling in value, it creates stress problems for them. And it's potentially why we're seeing things like this happening, where crypto liquidity provider and lender has halted client deposits and withdrawals amid the downturn in Bitcoin prices. And so we're obviously seeing the stress happening already. Now, when it comes to this, perhaps it would create another effect of Bitcoin further dropping because of a liquidity run, but it's also showing how they want to protect the price of Bitcoin because there is so much at stake here. You might think it's just the Bitcoin value going down is only that face value going, but there are so many other things that are tied to it, just like we talked about here, the value that is borrowed as collateral to then short against AMC and GME. These are all value that are tied up to Bitcoin, to crypto right now. And so if we see that disappear, if we see them fail, we could potentially see short sellers in that we talked about that utilizes Bitcoin to obviously see a lot of decline in their capital. And so one of the things we've been looking at has of course been the price of Bitcoin, because as far as we know, what we've seen in the past is that they are using Bitcoin as form of collateral and not other crypto so far that we know. Of course, if you know any others, feel free to comment down below. Now, over here, what we have is during this time, as we see the reverse split news, as we see what's happening with the liquidity, so we're talking about tech stocks falling, we are talking about Bitcoin dropping, we are seeing the short interest increase drastically. Over here, you will see the short interest, or at least this reported. Now, once again, this is self-reported. So realistically, you should times 10, at least in my opinion, you should times 10 the number that we're seeing. But what we are looking at right now is the short interest. And you can see for the red line, this was before the reverse split. But the yellow line, as we see the mentioning of reverse split, as we see the decline in value for Bitcoin, for tech stocks, for all of these collaterals, you can see how it suddenly spikes up. And like I said before, is that from here, it's going to 120 million. But for me, I think that we're seeing 1.2, we're seeing 12 billion because of how much value, how much of the time of the float has been sold over already. But you can still see this drastic increase. And this is important because in the 6th week, the reported SI for AMC has increased by 150%. We're seeing 50 million to 125 million. More importantly, all that shorting occurred under $2.11. The price remains low, off-exchange volume remains high, and borrow rate continues to rise as share availability drops. So there are so many things that we can obviously get off this. Firstly, we know that the liquidity problem is already becoming more and more serious. And so we're one step closer to shorts facing that margin call as they run out of capital. But secondly, is we understand that the shorts are still in this, because why would then we see the short interest for AMC to increase if the shorts have covered, if the shorts don't care about what happens to AMC? Firstly, you have to realize that this was during the time AMC was going up, and then they increased the short volume. So this is already a showcase of what was going on. But more importantly, afterward is we are seeing the borrow rate continue to rise. Now, why are they still borrowing shares even though we're about to see AMC issue out 100 million shares? And this is why I say to people who think that 100 million shares, they're claiming that 100 million shares has bailed out these short sellers. I've already said this in the past before, but I'll quickly say it again. I think there are billions and billions of synthetic shares that are out there. 100 million shares, even if it were all given to short sellers, it wouldn't even cover a tenth of how many synthetic shares that exist out there. And so to me, if it is something that is serious, if it is something that 100 million shares will allow these guys to get out, we wouldn't be seeing the share availability to drop, because they wouldn't need to borrow shares, because there will be an abundance of shares that is given out. And so that's why I said is that I don't think people realize how much synthetic shares there exists out there. Another thing is obviously talking about the $2.11 is why we saw the dark pool increase over here. So we already talked about this, but on the 9th of January, on the 12th of January, we saw the price increase by 13% and 5%. And this was during the time where AMC was seeing 60% dark pool. The moment they saw the price go up, the next day, when we saw a red day where we were down 7%, was coincidentally when we also saw a massive increase in dark pool where it went over 70%. And right after that, during times where we were stagnant, we were still seeing buys coming in, we were still seeing the price going up, we were then seeing dark pool go to as much as 85, even 89%. And so that just shows that they are worried about price going anywhere close to $2.11, because it would liquidate a bunch of short sellers that have created their position up there. And another thing is that what we also know with what's going on is that institutions are buying. We've already talked about how many institutions are buying, but you can still see the increase in which they are buying. So these are firstly companies who are creating positions that are completely brand new. So more and more people are realizing how discounted AMC is. But not only that, we're also seeing existing shareholders, existing institutions who have invested to continuously increase their position. Why would they increase a position if they think it's going to fail? You can also see this, and this is a big thing that we do need to pay attention to, which is late December 2025, the algos at UBS pivoted. They've carried Credit Suisse back since its acquisition on June 12, 2023, but now need to hedge against this old total return swap position with 31.8 million AMC shares, or see profit by going long AMC. Either way, that is super bullish for retails. I think this was one of the biggest signs, which was for UBS. Firstly, they bought 31.7 million shares of AMC. Now, even if we throw away all of the short speculations on UBS for a minute, the fact that they were willing to buy this much of AMC, and bear in mind that this is something they bought previously at a higher price than now, is already showing how much they think AMC will grow, how much of an investment opportunity they view AMC. Now, let's throw in what we actually do think is the case, which is the Credit Suisse position in which they inherited that carries the toxic swaps of AMC. That is the reason why they need to buy 31 million. The reason and the fact they need to buy 31.8 million just shows how big these positions are, just shows how much money is at stake right now that they need to buy this much. Remember, UBS is currently in a position where they are being warned by regulations to increase their margin requirement. So they have to be extremely careful with their investment, yet they were willing to buy 31.8 million AMC shares. I think that just says a lot about what's going on. You can also see here, why would a hedge fund purchase 546,000 shares of AMC if the stock was going bankrupt? If all the stock does is drop and going to go into reverse split, why are institutions buying? So this is what we're looking at. So quant technology is something we've shown earlier as well, just a showcase of how many firms have been buying. This is also just one in particular. And it really just goes to show is that people are saying AMC is going to go bankrupt. People are saying that reverse split is going to throw investors away. But if anything, we're just seeing people buy. And now people are then saying that, the shares that we're issuing out is just allowing people to buy cheap. but yet we're still seeing people buy even before AMC is issuing out the shares. So how is that making sense of people claiming AMC is a failed investment, claiming that people are selling AMC and not buying AMC when we're seeing all of this happening? They say institutions are loading to short, but Fintel says otherwise. We've already talked about this, where we're seeing 369 long, 3 short, 12 was short and long. And you can see this from here. Now, this is really important that you guys understand that this is, firstly, 369 total institution in total, with 354 long only, and then with only 3 firms that are short only. This is just really showcasing what is happening for AMC and what the actual projection for AMC is. All the media articles who are saying it's time to be selling, you should not buy AMC, maybe they should tell that to the 354 firms who are only long on AMC, because they are the one who apparently needs to hear it if that is the case. Now, a big thing, and it's just another confirmation of naked short selling, is what we're seeing here. Within a year, Ken Griffin, Citadel, and Virtue Financial have been sued for alleged naked short selling. We already saw Genius Group filing a lawsuit, and now we're seeing another. And it just goes on to show the people who think that naked shorting is not true, the people who think that these firms are not involved, it just goes to show what is actually happening. And this is why I think you have to read this and understand. You're confusing survival with failure. AMC didn't sink, it survived a once-in-a-century shutdown that wiped out entire industries. Yes, it carried the acquisition debt going to 2020, and yes, it borrowed to survive a global collapse that literally shut its doors, and yet 5 years later, it's still here while the guaranteed bankruptcy crowd keeps moving the goalpost. Consumer didn't abandon movies, box office numbers prove that post-COVID. Debt is in denial, it's being extended, reworked, and addressed over time. Negative income during recovery isn't a death sentence, it's a phase. If AMC was truly irrelevant, it wouldn't require non-stop bashing, hit pieces, and daily FUD to scare people away. So this is what I think people need to realize. Because firstly, not only did they survive what we talked about here with a once-in-a-century shutdown that wiped out its entire industries, but it's also fighting against these institutions with hundreds of billions of dollars who are naked shorting firms like AMC, who are even naked shorting firms who are smaller than AMC. So that's what we're surviving. And you can see Genius Group who are failing against them. We're seeing SEGG who are suing against them. This is just to showcase how AMC not only survived what we talked about here with COVID that wiped out the entire industries, but against the corruption that's in the market. And so that's why these firms are worried. That's why we have to realize about AMC and what they're doing. And again, there will be people making points about other areas, wherever it's box office, wherever it's debt. And these things are, of course, true. But if you do your research and you see the improvements in box office, if you do the research and you see how AMC is combating its debt problems, you'll understand why that isn't something that's going to take them out. You can even see here, Houston just became home to AMC's first ever 4DX theater. They've opened their first 4DX auditorium in the United States, and this is what we are looking. It just goes on to talk about AMC's essential premium screens. And one of the biggest reasons why they did this is when we went through the files last time, it was shown that premium theaters actually generate more revenue and more profit, and so it's wise for AMC to actually make investments in this. And we will see from this about just how well AMC will do. And bear in mind, AMC's offering recently is to raise cash so that they can do more things like this. And so if we see this turn out to be even better than expected, then you can understand why AMC wants to raise that money and how well it will be used. You can also see here, it's so funny, the last year or so, AMC has dropped massively, but everyone were buying the stock. The bears all told us it was due to retail selling, even though OBV showed differently. And now, it also shows that AMC is one of the most owned on Robinhood, which we know that Robinhood is a predominant retail app. And the very fact it is in there with the likes of Nvidia, Apple, Tesla, Amazon, the fact that AMC is 6, it should really just show you how favored it is by the retail. Now, what they're saying is, of course, you can see the bear says dilution, but dilution hasn't occurred and the stock is only diluted once shares are issued and put into the market. And it just goes on to show what we're seeing about the price discovery that's not discovered for AMC and the fact they think we only own 72 shares each when in fact we own a lot more than that. And why we know that the shares have been sold over so many times, why the float is not what we see, but 10x, 20x, 50x, or potentially even 100x of what it is. And what we talked about earlier, share availability daily is shrinking. The borrow fee is still a joke, but the fact that we are seeing share availability go down and this borrow fee sometimes increasing, despite the fact that they're going to get access to 100 million odd shares, is just showing the desperation. And what we talked about here, about how retail orders can be routed to brokers, this is something we talked about in the past as well. And it just goes on to showcase kind of the manipulation and suppression that's obviously in the market. For those of you who want to read this, you can see the people that are involved, Citadel or Virtue. Going back to what we said earlier, Citadel and Virtue, who are seeing lawsuits on naked short selling. You just see exactly what's going on. Now, something that I want to talk about, which is the Shanghai Future Exchange tightening the rules around physical silver even more. Now, this change will make large-scale leverage naked shorting of silvers extremely challenging. So I think it's in our favor to see the silver prices going up. So definitely HYMC will be favoriting from this as well, benefiting from this as well. And so will AMC. And we're also seeing right now bankruptcy hitting highest rate since COVID. And so they're talking about bankruptcy on AMC, but AMC has survived. And they're not talking about bankruptcy on these other stocks. I think that is the most thing that we need to be paying attention to. As always, now this is financial advice, so do take that as a grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.